Investment Banking Week of February 27th through March 5th by Mitchell Henderson, Pam Coburn, Brian Whelan, Amber Hollis, and Tristan Hughes.
This is Brian Whelan. This week, One Roof Energy, one of the nation's fastest growing solar finance providers, announced that it has secured an agreement for the acquisition of up to $1 million in residential solar projects with MS Solar Holdings. With this new investment, One Roof Energy has raised and secured commitments for more than $200 million in corporate capital, project financing, tax equity funding since it's closed its first tax equity fund in September of 2011. Also this week, Tesaro announced that it has priced an underwritten public offering of 2.4 million shares of its common stock at a price to the public of $18 per share. Citigroup and Morgan Stanley are acting as joint booking managers for the offering. On March 1st, International Oil filed a registration with the U.S. SEC to sell from time to time up to 1 billion of common shares, preferred shares, warrants, or any combination thereof to facilitate its growth over the next 10 years. On March 4th, CNBC confirmed that JCPenney's will be issuing 10 million shares of stock. Facebook affirmed that it would acquire Atlas from Microsoft. They have agreed to acquire Atlas Advertiser Suite from Microsoft. Atlas is the leader in campaign management and measurement for marketers and agencies. Atlas has built capabilities that allow for this kind of measurement, and enhancing these systems will give marketers a deeper understanding of effectiveness and lead to better digital advertising experiences for consumers. Also this week, Flowers Foods was named the high bidder and purchaser to buy Hostess Brands breads, including Wonder Bread, for $360 million. Dr. Pepper and Snapple Group has reached an agreement with Melendez International to reacquire the distribution rights for Snapple and several other non-carbonated beverages in parts of Asia Pacific. The company will have the rights to distribute Snapple in Australia, Malaysia, Singapore, China, Hong Kong, Japan, and South Korea.
This is Mitchell Henderson, and in an overview of economic conditions from this week, the budget cuts proposed by the government went into effect on Friday. It is estimated that there will be 700,000 jobs lost this year alone from these budget cuts, with the possibility of many more jobs lost over the next decade. In tax developments, there has been proposed to have a financial transaction tax. This will be a tax on individual market trades. This tax is not a new idea and has been implemented throughout the last century. And every time it has been implemented, it has had negative consequences on the market, and sometimes dropping trading by up to 37%.
I'm Tristan Hughes. Positive news in the industry has come up. In a recent report by Bloomberg, says investment banking is back on the rise. Bloomberg has spoken with deal makers, and they believe that the economic statistics show the markets are, quote, ripe for the rebound in mergers and acquisitions and equity issuance in 2013, end quote. In 2012, J.P. Morgan earned $3.97 billion in fees, a 24.8% increase over 2011. The investment banking industry fees rose 3.7% to a total of $50.9 billion, driven higher by a surge of refinancing of corporate debt. We have already seen a rise in the industry with the purchase of Dell by Silver Lake Management for $24.4 billion, which was the biggest leveraged buyout since 2007, followed by Buffett and Lehman buyout of the Heinz Corporation for $23 billion. There was also an $11 billion merger of American Airlines with US Airways, and it looks like Liberty Global Incorporated will purchase Virgin Media Incorporated, which will be the biggest media company deal since 2007 for $17.4 billion. But many corporate executives and speculators are sitting and waiting, concerned about the U.S. Congress and its decision on the sequestral situation. They believe the decision may help or hurt the market depending on what they decide and are waiting for the decision along with the market's reaction. BNP Paribas is expanding its investment banking operations into Africa. They feel developing markets such as Nigeria, with large populations, a well-developed banking sector, and major investments planned, along with other African nations, which it feels has the greatest potential and more promising growth, compared to the Eurozone, which it feels is a riskier investment. But there have been elimination of services offered. UBS has announced it would largely exit fixed income trading. They recently just closed down their branch in Toronto and would eliminate around 10,000 jobs. Citigroup also announced it would be pulling back from emerging markets and reducing jobs by 11,000.
This is Pam Coburn. This week in global markets, the Eurozone crisis is back. The failure of Italy's election to produce a clear winner has re-injected tension into markets, affecting instruments as far as the Japanese yen and CBOE volatility index. Since Italy's inconclusive election, a 10-year government bond garnered solid demand. Stock markets in Europe rose as Italy sold 6.5 billion euros in debt. Argentina and a group of creditors have a long-going battle over Argentina defaulting on its debt in 2001. The group of creditors that didn't agree to prior debt swaps is suing Argentina for full repayment in U.S. courts. The creditors feel that Argentina has the money to repay and are choosing not to pay their debt. This case could influence other defaulted countries as they seek to restructure debt in the U.S. in the future. Later in the week, Argentina's president, Cristina Kirchner, indicated she may make an offer to creditors who refuse to negotiate terms on their debt. The price of the Argentina government bond rose with this announcement. The Bank of China is the largest foreign lender of commercial real estate in the U.S. The Chinese bank is the first lender to participate in the sale of U.S. commercial mortgage-backed securities, known as CMBS. The CMBS market is off to a record start this year. Investors are moving into riskier investments looking for greater returns, since the Fed has near zero interest rates on the safest debt, including treasuries. The Bank of China bets the property values has fallen enough that its lending risk will be limited. The bank will not become a U.S. broker-dealer. They will only contribute loans. The UK was downgraded a week ago. As a result, the 10-year government bond yields are down. Gilts have been driven higher by the Italian election result and poor economic news. The UK risks have risen. Sterling is the best barometer of that. The pound is at the lowest level against the dollar, trading Friday below $1.50, and is down 8% this year. Weglin & Company is a prestigious bank in Switzerland that is expected to become the first foreign bank to be criminally sentenced for tax violations. The rules of global banking have changed. Weglin went to great lengths to comply with U.S. laws and didn't know they would be punished for what it was legally entitled to do under Swiss law. The Swiss bank stated, "Swiss banking privacy and its potential for concealing tax evasion by U.S. persons has never been a secret. They have been fined $75 million and are cutting its losses by selling off its new U.S. banking businesses." On commodities, the cocoa futures have been pushed below $2,100 a ton. Futures last fell below that price on June 25th. The International Cocoa Organization is forecasting a shortage in the supply of cocoa.
This is Amber, and I'm going to be talking about leveraged buyouts and hedge funds. Leveraged buyouts are as compelling as ever because the borrowing costs are so low for the less credit-worthy companies. The lower interest expense increases the odds that a company will survive and keep paying dividends after a buyout. The Arsenal Football Club may be bought out by a Middle East group for $2.3 billion, which may potentially be the sport's biggest takeover. The bid, which is more than twice the amount Arsenal was valued at 2 years ago, will be backed by hedge funds from Qatar and United Arab Emirates. Berkshire Hathaway and private equity firm 3G Capital received a $14 billion leveraged loan within days of asking to purchase H.G. Heinz Company. The The gamble they took paid off because the demand for buyout loans is returning to levels not seen since before the financial crisis. According to ICE Futures Europe, hedge funds and other money managers cut bullish bets on Brent crude by its most in more than 18 months. The bearish positions outnumber bullish positions by 198,946, down 15% from the week earlier, which makes for the third consecutive drop. Lansdowne Partners Limited, the biggest Europe hedge fund focused on stock pricing, says co-founder Paul Rudock will retire as chief executive officer at the end of June to focus on interests outside of asset management. Goldman Sachs has the fewest trading day losses since at least 2004. Goldman has been redeeming hedge fund holdings to comply with the Volcker Rule, and the firm outlined risks to its businesses from attempts to regulate foreign subsidiaries. The company has also limited new investments in hedge funds and private equity funds to 3% to comply with the rule, which must be accomplished by July 2014. That concludes the presentation of the market from February 27th to March 5th. We hope you enjoyed our presentation, and this is the list of sources that were used.